Hello, everyone, and welcome to today's episode of Retirement Plan Smackdown, where we compare and contrast all different kinds of investment strategies and retirement income plans to help you answer the biggest questions that today's affluent baby boomers face. Namely, will I run out of money in retirement? And is there something better that I should be doing with my money? In today's episode, we'll be discussing long-term care, and we'll answer the question, is it better to buy a traditional long-term care plan or a hybrid, asset-based long-term care plan like a life insurance or annuity policy that includes long-term care benefits? If you aren't familiar with the different types of long-term care plans available, then please request our free long-term care planning booklet that will teach you all about it. Helen is a healthy 60-year-old female and knows long-term care is important because she watched her parents blow through their entire life savings on nursing home care. First for Dad, and then for Helen's mother when she got Alzheimer's. She does not want this to happen to her. Her advisor is trying to convince her to purchase an asset-based long-term care life insurance plan through Genworth for $100,000 that will provide her with $687,000 of long-term care benefits at age 85, if she needs it, a $229,000 death benefit if she doesn't, and a $100,000 money-back guarantee of her original premium. Her question for Retirement Smackdown is that the best she can do with her $100,000, or is there something else? Great question, Helen. Here's the Smackdown. First, let's compare the top annuity plans with long-term care benefits. We like to use SideBySideQuotes.com for instant price comparisons for long-term care annuities. And by doing so, we find out that $100,000 will give Helen the following long-term care benefits at age 85. The Annuicare annuity from Guarantee Income Life will provide her with $542,000 of benefits. And if she doesn't use it, she'll have $180,000 that she can use for her retirement. The ForCare long-term care annuity from Forethought will provide her an immediate $300,000 long-term care benefit. Again, if she doesn't use it, she can get the $100,000 back. The Annuity Care 2 from One America will provide her with $334,000 worth of long-term care benefits at age 85 and a little over $116,000 of money back if she doesn't use it. And although the Precision 14 annuity from North American is not a true annuity long-term care product, it is an annuity that has a long-term care rider. This will provide Helen with approximately $321,000 worth of long-term care benefits at age 85, and it will continue to pay out $53,000 a year for as long as she's alive. If she doesn't use it, then she can get anywhere from $80,000 to $130,000 back depending on the performance of the annuity. So those are all fine and good from the annuity side, but we want to look at some other options. So let's compare the top standalone long-term care companies that will provide her the equivalent of $687,000 worth of long-term care benefits when Helen is age 85. Again, we'll go to SideBySideQuotes.com. They have instant price comparisons that shop over 121 different long-term care plans. And for Helen, we find that annual prices will range anywhere from $2,300 to $8,100 a year from 13 different long-term care carriers. Ouch! Out of the 13 carriers, only 2 have never risen their long-term care rates. So we recommend that Helen purchase a standalone long-term care plan for $2,300 a year. That will provide her with instant long-term care coverage from day one, and it will grow to over $687,000 worth of inflation-adjusted coverage at age 85. Now, Helen has approximately $97,000 left, so to give her the $200,000 of life insurance protection that she wants, we'll again go to SideBySideQuotes.com and compare prices from over 150 different life insurance companies and find a guaranteed policy for $2,500 a year. After purchasing the long-term care plan and the life insurance, we'll invest the $95,000 that is left into Anthony Capital's fact-based investment allocation strategy, La Plata 60/40 portfolio. Now, this is a risk-managed moderate portfolio that has a 60% allocation to equities, a 40% allocation to fixed income. Fact-based investment allocation strategy portfolios avoided the bear markets of 2000 and 2002 and the financial crisis of 2008. Since 2001, the La Plata portfolio has had a compound annual rate of return of 12.8%, net of all fees and expenses, with the maximum drawdown during that time being about 7.5%, compared to over a 55% drawdown with the S&P 500. Now, assuming the portfolio were to average 10% over the next 25 years, and we take annual withdrawals out of the portfolio of $4,700 a year to pay for the life insurance and the long-term care, at age 85, Helen would have a little over $1.1 million in her investment account. Now, past performance does not predict future results, but compared to buying a regular life insurance policy with a long-term care rider for $100,000, or an annuity with a long-term care benefit for the same amount, Helen can maximize her $100,000 and get guaranteed inflation-adjusted long-term care coverage worth $687,000 of benefits at age 85, a guaranteed $200,000 tax-free life insurance policy for her spouse and kids, and have a 100% liquid, risk-adjusted investment account that could potentially grow to over $1.1 million at age 85 and provide her with additional funds as needed. This account would still get a step up in basis at her death, and her kids and spouse may potentially inherit that tax-free. In fact, if Helen really wanted to maximize her $100,000, instead of purchasing a traditional life insurance policy for $2,500 a year that provides nothing more than a death benefit, she could purchase an investment-grade variable universal life policy and use fact-based investment allocation strategy portfolios to earn additional returns on her $2,500 a year premium. Properly structured, the investment-grade life insurance contract could grow to have a value of over $225,000 at age 85 and have a $325,000 tax-free death benefit. Helen could accomplish all of the things that she needs by integrating her long-term care, life insurance, and investments into a single, comprehensive, optimized plan. And this is what Anthony Capital does for their advisory clients. And this is what we can do for you. If you have over $250,000 to invest and want to find out if your current retirement plan, annuity, long-term care, life insurance, or investment portfolio can be improved upon, then click on the link below to request a no-obligation, complimentary 15-minute discovery session to see if we can help. This is a no-hassle phone chat with one of Anthony Capital's financial advisors. If we can help, great. If not, maybe we can point you in the right direction to someone who can. In Helen's case, her choice to adopt the plan that we've outlined could increase her net worth by over $1.6 million for the same $100,000 allocation. How much of a difference can we make in your plan? Schedule your 15-minute phone chat today to find out. That's it for today's edition of Retirement Plan Smackdown. Don't forget to request your free long-term care planning booklet that will help you make more informed long-term care decisions. And if you want to get the smackdown on your own personal retirement planning questions, send us an email, and we'll see if we can feature your question in our next video. Take care, and schedule that 15-minute phone chat. Bye-bye.